Good morning and welcome to Beyond the SEAF model. I'm Jack Kosar. This is effective for the week of May 5th, 2025. Let's get started. SEAF signals for this week. We retain technology and communication services and we add in real estate. Showing a lot of strength here from technology with a ranking of 4. That is the second highest ranking you can have. Only thing that we're a little bit light on here is the strategic corridor. We have a 2, which is still in the utilities basket. Speaking of utilities, taking a little bit of header here, 7 on the trading week, pushing it down to 11. Still a favored sector, but showing a little bit of weakness on the short term here. Communication services, not to be mistaken, is weak. Is also showing some strength here with trading week of at 2 and a tactical month at 2 as well, for an overall score of 8. Energy remains at the bottom here with 11s across the board, with the worst ranking you can have at a 33. Healthcare showing some weakness in reverse, 8 to 9 to 10. And overall, massive drop off after utilities. The only 4 sectors that are are showing favored are have some decent scores, but again, a nice steady drop off after that. Heading into our heat map. As we can see here, technology showing a lot of strength in the trading week and the tactical month. Outside of that, we see a little bit of positive in the communication services, but as we'll show on the rainbow map, we will need to see those flows kind of increase a little bit more to pick up that relative performance versus SPY. Overall, this heat map is showing the directional positivity that I like to see. I would like to see a little bit of darker greens up here, but as of right now, a lot of that money is just flowing into tech. 0.48% on the trading week. So showing some significant strength, as I always mention, over a 0.4 on any particular week is a significant move. Everything else here is relatively light. We are seeing a decent strong outflow of energy at 0.23 on the trading week. For the last 5 days have been positive in terms of inflows into the entire 11 sector spiders for a net of 2.3% increase in those flows. What's that telling me? We have our leader in technology. I said a couple of weeks ago we really needed to see a leader if this thing was going to turn around. We do have our leader in tech. Tech often leads, which is good, and showing a lot of positive inflows, meaning that whatever was spooking, whatever was coming out of Washington or whatever was spooking investors in general, so far has subsided, or at least they're taking a breather, and money's flowing into tech. Again, showing some positives. Heading into our heat maps, technologies first. So as you can see here, we've shot up in the last 2 weeks, shot up from that deep avoid, neutral, now into favored. So again, we have our market leader. What is that doing for us? That is really showing some really positive relative outperformance versus the market. We had a bit of a decline here going back to really June of last year. So, kind of a downtrend. Looks like we have broken that in bottom in terms of relative performance, and we're now trending in the right direction. Obviously, we'll need to see some sustained flows to stay up here. But again, with the 0.48% on the trading week, in terms of its inflow for technology, that is showing that there's some conviction here for tech. So that's overall extremely positive. Communication services came on into a void. We've had this nice run up in this positive relative outperformance versus SPY for communication services quite a while. A little bit of a trading into a box here. Like I said, this is ever so slightly positive in terms of its relative performance versus SPY. A little bit flat. We're seeing some positive flows overall into communication services. I would like to see those flows pop up a little bit more right now, like 0.07% increase on the trading week. I would like to see that up, and if it's going to be in that second spot, closer to 0.2%, to really kind of drive this relative outperformance chart higher. But again, good place to be, seeing some positive flows for 3 time periods. Our communication services is still a good place to be for our SEAF model. Looking at real estate, we do have this nice positive relative performance uptrend, really starting back in the part of January, where we've been floating in this lower favored ranking. Now, overall, like I said before, part of the reason we're seeing a little bit of push into the favored for real estate is the lack of flows in any of the other sectors, but we are seeing strength across three different time periods and having some really strong accumulation in the strategic quarter. A little bit of bump will get this thing really flying, especially the relative performance is a little bit of in a box, but things looking positive for real estate. Next into energy. Again, we've been kind of watching energy. Watched it try to come up into neutral a couple weeks ago, flatlined again. We're back into the bottom. This seems to be where energy is going to sit. We've been trading in this relative performance box, really going back to June of last year. Not a lot to do here with energy. As like I said, we got a little bit of a every couple of months we try to every couple of weeks, couple of months we try to poke up into favored. There seems to be somebody that's trying to buy the dip on energy, but we still haven't found that bottom yet. So energy continues to be a place to avoid. Last one I wanted to bring up is consumer discretionary. We kind of mentioned it last week, and this is one of the reasons we don't always bite on these positive inflows because we're not projecting cash flows here. So we don't know that just because we have a positive trend in the from avoid to neutral, that we're going to get into favored. We do need to see this thing push up into upper favored, and we had a little bit of a rejection here. As you can see, we're trading sideways on the relative outperformance versus SPY with a little bit of a turn down. That's not to say that consumer discretionary can't pop up still. It still has that positive momentum that I am looking for. So it goes from 10 to 6 to 4. So we are seeing it start to move up the board, but we will need to see that really strong inflow to kind of push the envelope here. Consumer discretionary is tough. A lot of the tariffs are going to have, a lot of those companies are still on uncertain footing to really know what they can project into the future in terms of their earnings and cash flows, which creates a little bit of trouble here. We would, if we can get some clarity, we could see consumer discretionary pop up and kind of come in with technology. As its friend here, but as of right now, nothing to do yet with consumer discretionary. We'll keep an eye on it because again, it's starting to move up that board. It has that positive skew, and once that strategic quarter of 10 drops off, we could see a little bit of more positive momentum into consumer discretionary, but still nothing to do here. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. Thank you.